Happy Monday, everyone. So it's Nick Carranza here again, and I hope you enjoyed that flashy new intro. We're kind of working on it, so we'll see. It's like a work in progress. At the time I'm recording this, I don't even know if I'm going to be able to add that intro to the thing. So, welcome to like a beta version of Renegade Real Estate TV. We'll see how this thing plays out. Something came across my desk, my computer inbox that I wanted to share with you today. It's pretty insightful. Again, it goes back to these media headlines. We're getting blasted with stuff. It's kind of died down a bit. Everyone's waiting for the other shoe to drop. But what's died down is those negative headlines about the recession. They're still there, though. But you know what? Something super interesting came across my desk, and this is from the Altus Group economic. The Altus Group, actually, they do some research and provide their own statistics. Basically, it's been taken from StatsCan, and they've kind of broken it down into their own little chart and stuff, which is really cool because it's always nice to see information put in different light. And I hope you can see this. It says, despite the recession, still wage gains across the country. It's really interesting. And the reason this is insightful is because as an investor, we want to know where people's earnings are, because earnings will impact how much they can afford for rent and for home ownership and things like that. So if wages are on their way down, it matters to us. And if they're on their way up, it matters to us as well. So what I thought was interesting is overall Canada, see the far graphs here are the overall wage increases, and it's average. I mean, there's going to be good and bad, just like anything, right? But overall in Canada, the wage increases are about 2% year over year. That's from last year. And now this is only just it's January to April for 2009. So it's not the whole year yet, but I mean, January to April are some pretty rough months for income, right? So it's pretty insightful. You can see Alberta's still pretty high. They have a lot of new job growth over there. And also because it's percentages, you have to remember if the average wage in that area was lower, it doesn't take as much of an increase to make the percentage increase. So, when you deal with percentages, sometimes things can be a little bit messy. So just keep that stuff in mind. But the general theme is that you can see across the board things are pretty good. Quebec's still got a little bit bump. Ontario's not too bad. I mean, they're hovering around the 2% mark, and right around where Manitoba and Saskatchewan are. So overall, I mean, we have some decent-sized wage increases across Canada, and one of the things that impacts the housing market is the affordability of homes, because when the affordability of homes outstrips a certain percentage of the average Canadian income, you can generally see that that's a market correction waiting to happen. Right? When it's underneath a certain percentage of the Canadian income, then it's usually a good sign the housing market's on solid footing. So as wages continue to grow, it's a positive thing for us. It's a positive thing for all investors. So, quick little short tidbit of information today. Pretty insightful to me. I wouldn't have thought that these were the numbers. I'll hold it up again just in case you want to look at it. But again, it was from the Altus Group. I can't take credit for putting these numbers together. They got the information from Statistics Canada, so you got to think it's kind of reliable. Our tax dollars pay for it. Let's use it to our advantage when we invest. Until next time, your life, your terms.